You only fuck up in the start.
I know. Once I get going, oh, what's that? I got a new. Someone come in. I got a new blanket. I need a throw blanket. That's an adult shit right there. Yeah.
Cool, dude.
Alright you guys, thank you for tuning in and watching this video, and today we are going to be talking about purchasing a property that is not yet complete, or purchasing a property that is either damaged by fire or damaged in some sense. And I have Zach with me going to explain the pros and cons of that and ways around this, because it's not as simple as you think. So right now I'm seeing a lot of unfinished homes on the market that are literally like studs, whether it was a new builder or someone trying to do a flip and they bought at the peak of the market, they have the permits in place. The house is literally studs, you know, like everything's subflooring, everything's exposed. The house is not livable at all. Let's say it's about 50 to 70% complete. They have the permits in place, they have the renderings in place, and they're gonna sell that with the price of the home. It's just that seller now has either run out of funds or run out of patience, and they're now looking to offload that property. I'm seeing a lot of these in the downtown core, and people bought at these really high price points because we didn't know that it was going to come down so hard the way it did, but they bought at these really high price points. Cost of building has gone up like crazy. We all know that. So these people are now just offloading this and putting it on MLS. So it seems desirable, I think, to a new builder or a first-time flipper. But there's a lot of things we want to talk about. We can also talk about that new flipping.
Yeah.
It came to mind. But I think a lot of people see these properties as like, okay, wow, they have all the permits in place, which they know can be a timely issue. We're just gonna walk in here and finish it ourselves. It only needs maybe $200,000, $300,000 left. Example, I had a property I showed the other day that was damaged by fire, and it was literally, the exterior was fine, but the interior was literally bare. Studs, everything exposed, it was damaged by fire. They didn't have the permits and stuff, whatnot, but I want you to kind of go over some of the issues you're gonna run into, because it's not just you buy the property, you get a mortgage from TD Bank, and you're good to go, all Gucci, see you later. There's actually a lot of issues that might arise during this, and you wouldn't even get an A lender.
That's it. That's the biggest issue, that no lender is going to touch this property until it's been remediated or fixed up or completed, right? You're not going to get a mortgage on a property, and it's really just marketability. You have to think in the worst case scenario, the way that a bank thinks, right? TD Bank, if you don't pay your mortgage, is going to have to foreclose on that default. They're going to sell the property to recoup the losses from you not paying your mortgage.
Right.
So if you have a property that's 60% complete, well, TD Bank isn't getting their guys from the office to put hard hats on and finish the project themselves, or even hiring contractors. They're not going to go through that whole process, right? So that's why they're only going to lend on 98% complete, 100% complete properties, or do an actual A lender, or even B, an alternative lending. So the fact of the matter is, if you have an incomplete property, you're likely going to have to go with the private lending route. Now, private lenders are willing to take more risk. Again, something that we've talked about in another video. If you have multiple properties, this is where you can do a blanket mortgage across multiple properties. So go back and watch a video or two ago.
I'll put the link here.
Yeah, perfect. So that, or just a private loan, someone with a higher risk tolerance. Now, also in this fact, you're going to have a lot of cash to come to the table, because even if that private lender is willing to take a risk on you, they're not going to take 80, 90% of the loan to value on the property. They're probably going to go max maybe 50%. So if they're selling at $700,000, say it's a $1.2 million house, all nice and finished, but it's 50% complete. They're selling at $700,000. Well, you're going to have at least some skin in the game, lots of skin in the game.
Right.
You're going to have $300,000, $350,000 in cash.
I was trying to calculate half a second.
And then I saw it. That's why I said it for you. Don't worry.
Hope it doesn't look at me soon.
But yeah, you're going to have to come to the table with some cash as well. You'll still find a loan somewhere out there. But you're definitely not going to find an 80% loan on that property.
So, and correct me if I'm wrong, you go the private route, it would take you the time. You have a certain timeline with that loan before, or how do you switch to a lender after?
Yeah, so generally private loans are going to be max 1 year. You can even get shorter term private loans than that, or fully open private loans, which is going to be the best option for you.
What does that mean?
This means you're going to have no repayment penalty on
Okay.
it, right? So say if you finish the project really quick in 3 months, you don't want to be stuck in a 1 year private, because then if you break it, then the lender's going to say, okay, you got to give me whatever terms they set out in the contract, $5,000, 3 months interest, the payments till the end of the term, which would be the worst. You have to pay 8 months of the mortgage payments just to get out of it, right? There'd be no point. The other thing to really take into account with private loans is, yes, your interest rate's going to be higher, but that's not necessarily the thing that you really need to worry about the most, right? The carrying cost, yeah, it could be 10, 12% on your interest rate, but the fees associated with just getting that money. So they're going to attach this either to the property, or you're going to have to actually pay this to them when you obtain the loan. It's going to be as much as 2.5%, 3%, depending on the location, depending on the property, depending on you as a borrower. You know, they're not really going to look at your income and all of that. It's a private loan. They don't really care as long as you make the payments, but they might still look into some sort of credit history or anything like that, and tailor that loan accordingly.
So then you would basically borrow from a private lender, complete your renovations. So you need to have the 50% down payment, plus you need to have renovation money all at cash in hand.
Yeah.
Then what you would do is you'd pay back the private lender, remortgage the house under an A lender or B lender or whatever lender you choose.
So once you're fully complete, as long as you qualify, because now you're going to have to go into actual qualifying based on your income and credit and everything else encompassed with that, with getting an A or B lender, then yeah, you just go ahead and refinance the property. You pay out that private. As I said, it's better if you're going to have like an open loan that you can repay very easily without terms or anything like that, or it's a 6-month term and you pay them back right on that 6 month if you have a very good outline of how long the work is going to take, right? And then yeah, simply refinance with TD, Scotia, RMG, MCAP, whoever you want, any A lender, financial institution.
And I think this is, again, we do these videos always to have pros and cons for everybody, the buyer, seller, mortgage agents looking to learn, realtors looking to learn. Right now, again, like I said at the beginning of this video, I've seen a lot of these properties come to market, and I have a lot of first-time flippers or first-time people that want to become, builders or whatever, their first project. With the guidance of a non-educated realtor, it can really come back to bite you in the butt, because your realtor has to have this upfront education that they can present to you as a buyer or seller. And if you're a realtor watching this, make sure you understand these and look into it and research it, because we're going to continue to see more and more of these properties come available, and they are desirable to a lot of people because the price point's low. Neighboring properties could be selling in the $1+ millions, and this one's listed for, let's say, 800,000. Because the potential is there. You just have to have the experience and knowledge to actually overcome the obstacles, to actually make sure to set you're reaching your goal as you expected without as many hiccups as possible.
You also don't want to set expectations of the client. Oh, it's 800,000. You're approved up to that, so no problem. Well, you're not approved with a private lender. You don't have that much cash or capital to be able to actually fix up the property, etc. Right? Yeah, you may be able to buy a resale. It's all nice and finished up to 800,000, but you're not going to get a traditional mortgage in the sense of these properties.
And then there's one more thing I want to touch on, was that this rule came into effect, I think, a while ago, about if you're flipping a home, you're not allowed to. There's certain taxes on it if you buy, renovate, and sell within, I think it's 365 days. I know there's obstacles and loopholes around this kind of thing, but can you explain that? Yeah,
so it was proposed a while back. It is coming to fruition January 1st, 2023. This will be put into play. It's an anti-flipping or flipping tax, not anti-flipping. Yeah, no more flipping. But it is essentially, it's going to put a big wrench in people that are trying to do quick fix and flip projects or 3-6 months and changing and saying that's their principal residence, because this is coming into effect even for owner-occupied properties. So prior to this, if you had an owner-occupied property and you sold after 6 months or 8 months, I had clients that would move into, say, a new build, and then they were like, we hate it here, we want to move. So after 3 months, they would have potentially been subject to this flipping tax. So it is going to be 100% of those profits will be taxable, even if it's owner occupied, and they'll be taxed as business income as opposed to capital gains tax. Another aspect I just forgot what I was going to say. Fuck, we're so good on that.
You're doing it good. You're on the roll there too.
Another aspect to this is that there are not necessarily loopholes, but exceptions that can be made, right? Divorce, death, relocation for work,
children,
things like that. I don't know about children.
I read that.
Maybe. I'm not actually sure. So that'd be something that
put in the comments.
Look into. Yeah, exactly. So I'm assuming big life events with the help of your real estate lawyer or anything like that could probably get you through or get you out of these things, but it's definitely going to be cracked down upon much harder.
I remember this coming into effect because there was a few other things. It was the Liberal Party that brought this into effect, right? And I remember that these things coming into effect, and that was maybe 4, 5, 6 months ago. So people have probably forgotten about that since. And it's funny because I actually did a Google search on this prior to us talking about it, and there really wasn't much information out there because all the articles were just talking about how Toronto was the bubbliest city.
Yeah.
So you just make sure you have.
It gets buried. These things it's like any sort of new government policies that are going to affect a certain percentage, right? This isn't going to affect everyone by any means whatsoever. It's going to affect a small population. But all these things are also their government policies. They get proposed all the time and they don't actually happen.
Right,
they get, they have a list of 10 things and 2 of the things actually come to fruition. Well, this is happening.
Fruition.
I said it twice actually already. That's my word of the day.
That's it, eh?
That's it.
All right, thanks for watching. We appreciate you guys tuning into all of our videos. If you have any questions, concerns, or want to add anything to this video, please put it in the comment section below. And if you don't want to miss any of the videos that we're putting out, make sure to hit the notification button below and the subscribe button so you don't miss a single video that gets put out by us. We appreciate you watching. See you guys.
Thanks.
You know, I bought a pillowcase off West Elm. It was like $100, okay? But I thought it was a pillow.
Yeah, it's just a case.
Dude,
So you have no
I'm like, I've never bought a pillow before.
I did the exact same shit the first time I bought. I'm like, oh, that's a fuzzy pillow or whatever on my couch, and then I'm like, what
This empty case.
I guess I'm going to IKEA to go buy.
I just put a few t-shirts in there. My old underwear. Like, oh, this pillow's awfully lumpy.